how to sell put options with over 80% historical win rate and high IVR so you can collect a lot more premium than what you should have. This is the tutorial that we're doing today using Market Chameleon Naked Put Screener. So let's get to it and go over all the details. Let's start with the disclaimer. Note that this is not a financial advice. I'm not a financial advisor. This is for entertainment, educational purposes only. And also my name is Eve, also known as Finance After 40. So with that being said, if you're not a member just yet, 7 days, link below for Market Chameleon free trial. Now, I'm going over Naked Put Screener. Let me tell you a secret, okay? A very important secret. I moved, I don't know, 3-4 months ago, could be a little more, from Robinhood to Tasty Trade, Tasty Works, I don't know the full name. The Tasty Trade is the platform, or the, you know what I mean. Tasty Work is the option platform. Anyway, when you can sell naked puts there, I know this sounds very scary. I know everything that you saw on YouTube and all the popular videos are cash secured put, but sometimes you don't have $90,000 to shield on a Costco put option, or $60,000 on Netflix, or even $20,000 on Tesla, or whatever the case. Okay, that's what Robinhood, they want you to do cash secured for all of those. But there's a lot of income that you can generate if you have margin account. This is not a margin video. I'm not supporting margin. You do what you want to do. It's your money. It's up to you. Not the focus, but the goal. You have to understand the math. Number one, you can sell naked put options on stocks that you don't own on Tastyworks, as long as you have the buying power. That's it. What is the buying power? Roughly for a margin account or cash account. No, margin account. I don't know about cash account. I have margin account. About 30%. Okay, about 30% of the stock. If you have 30%, 25, 30% of the stock price in buying power, you can sell naked put against it. If it's expire worthless, great. If it doesn't, close the trade before it reaches your strike. But make sure you sell an option 15%, 20%, 25% out of the money, so you have a lot of more cushion to the downside. It's not stocks, big market cap stock, let's say Apple 227 for example. You sell the 200, instead of having $20,000 in your account, you need probably 6,000-7,000. That's more manageable. Now, if Apple goes down tomorrow from 227 to like 195, yes, you are in trouble. What's the likelihood that this will happen? And by trouble, I mean that your, let's say, $50 that you collect, now you owe them like 500. Something like that. But you have 7,000 in buying power. Close the trade, basically, if you don't have 20,000 to buy Apple. Something to consider. I don't have a link, none of that stuff. Maybe on other videos, not the point. But if you want to sell options, which I do, naked options, what I need in Tasty Trade, 30% roughly, give or take. I don't know the exact numbers. It shows you automatically, but everything that I've seen, $200 stock, you need about 6,000-7,000. Sometimes it's 5,000, depends. Basically, depends on the IV, but roughly 30% of the price of the stock to sell naked option on. So let's get started. I assume you know what the put seller is. I've done a few filters in here. I want to go buy a couple of things. I want to collect as much money as possible. So I have done a filter of IV percent rank above 75%. You see here, above 75% is the IV rank. Okay, that means that based on history, I should collect a lot more premium than what I collect right now, because there could be earnings. People are scared. I don't know. Whatever the case, the price of the option is more expensive, so you sell premium, you collect more. Basically, and I also did this one, naked put win rate above 80%. I want to win. I want to win as much as possible. And again, in here you can play. I mean, above 90 is you gotta understand there's like give or take. The higher it is, let's say above 90, then your premium that you collect will be, I don't know, 50 bucks. I want to collect at least $100 per option that I sell. Again, I don't look at Robinhood where I need to shield the whole amount up front. I'm looking at Tastywork where I need to shield as buying power 30% collateral. That's it. I need 30% of the price collateral. And I keep my income. And as long as nothing bad happens, the stock doesn't drop 15-20% to my strike price by expiration. Remember, every day there's like theta decay. The price of the option goes down as the days goes by. And I've done here naked put versus stock win rate. The strategy percentage win over the stock win rate, meaning when you sell naked options is better than just buying the stock. So let's see what we got. We got ourselves 40 pages, but I don't care about that. I have filtered this by a high market cap, which is right here. You see all the market cap from here. And we got Taiwan Semiconductor, we got AVGO, we got all those clusters. So let's see what we got. Now we got ourselves, and also let's see the expiration next 30 days. Instead of October 18 specifically, which is the monthly, I just put the next 30 days. You can play with this as well to your liking. So let's start with the first one and see what we got. We got Taiwan Semiconductor price 181. Okay, October 25 is the expiration, which is the week after the October 18. Okay, interesting. And there's earnings 2 weeks before. Now look what it tells us to do. Sell the 165 strike, sell the 165 option. I'm just looking at the first one. I'm not saying go do it. Collect almost $250 if you sell a naked put. Again, I'm not looking at Robinhood where you need to have 18,000 in your account. If you do this on Tastywork, they will probably want 6,000 give or take in your account in buying power to do this trade. And if you collect 250, that's up to you. But the key here is all this. Option IV 79%, 87, 80, 80, 80. So let's see something in double digits. Okay, let's see double digits of distance from the stock. This is close. This is interesting. Let's see what we got here. But also, okay, this is the combination. Double digits outside of income. So this is the first win that I see. Not win. It doesn't win until you close the trade for a profit. The TSM 182 almost the price. October 18 again, you can close the trade before the earnings, but until then, from here until the earnings for the next, I don't know, 2.5 weeks, 3 weeks almost, the price will decay if nothing crazy happens. That's all. The price of the option decay. Strike 165, that's $20 below, $20 below, 10.7% distance from the stock, 86% option IV rank. You got 11.6% downside cushion. That is a lot. That is a lot. You got the time premium going for your favor. If flat return, you still got 4.4%, 91.9% naked put win rate. That is beautiful. Stock win rate 52%. That I assume is just for buying the stock. 91% historic win rate. That this will not go to 162, $20 from here by expiration. Now let's say you have Tastywork. You put $6,000 buying power. I'm not saying go do it right now. I'm just telling you the difference that is night and day between Robinhood and Tastywork. I used to like Robinhood, but there's so much stuff in Tastywork. And this is a market chameleon tutorial video, by the way. There's nothing to do with Tastywork. I'm just telling you where I do stuff. 162. You don't even need 30% from here. You need 30% from here, which is about 5,000, 5.5, something like that. You put that as buying power. For the example, again, not saying go do it. Collect 160 bucks compared to 5,000 that you put as buying power instead of 18,000 that you put as buying power on Robinhood. That is powerful. If the stock stays the same, this is yours, $160. If the stock goes up, this is yours. If the stock goes down to 162.51, this is yours to keep. Option will expire worthless. And if you want to own TSM because you think it's a good stock, you want to hold it long term, so you got $2,000 discount. If you want to buy 100 shares, that's another option. You need to have 16,000 compared to 18,000. And if it does drop, then your break even is 162.5 minus about 161. Much better than 182. Much better. And if it doesn't happen in the next 3 weeks or so, this money is yours. That's it. Plain and simple. So this is one option. Let's go and see, and you can filter and play around, but I want to see other than Taiwan Semiconductor. Let me see AVGO, which was on a tear from like 140 to 175 in the last 2 weeks. Let's see what we got. Broadcom, 800 billion market cap. Also, again, that's my formula. Look for double digits. No. Here's double digits, and I'm looking for something in here that is over $1. Now, the only thing that I see is this one, 9.7% distance away. Okay, so that's close enough to the double digits. Collect $121. 13 delta, 79% IV. There's no earnings, there's no nothing. 18th of October is the expiration. Price 175, and it tells you to sell the 158 put. That's it. Sell the 158 put. Remember, it went from 140 to 175 in like, I don't know, 2 weeks of on a tear. To go down 10%, I mean, it could happen, but usually not a financial advice. After a tear, once the tear stops, once the ripping melt up faces the stop, it's gonna range. And while it's ranging, this $120 will go down to 100, to 80, to 60, to 50, to 40, 20, etc. And by that time, close the trade. There's nothing that, I don't know, there's nothing that could make this stock go down unless there's like, meltdown for the whole market. But that's a different story. You got 10.4% distance cushion, 79% IV rank. Look at this, 96% historical win rate. Naked put win rate based on history. You got 96% chance that it will not happen. Now, if you have Robinhood, you need to have almost $16,000 in your account. And if you have Tastyworks, you need what? 4,000, 4,500, something like that. That's it. That's how, with a small account, by small account I mean 10, 20K, something like that. That's how you can sell options and play in the option, not on the risky option, with the big market cap stocks. Collect $120 for about $4,000 that you risk. You're not risking $16,000. You're not. And if the stock goes down to goes down to 158, and you wanna buy Broadcom, but you miss this tear, you miss it, here's your chance. And if it doesn't happen, that's your money. And again, remember, 96% chance that this will work based on history. What's wrong with that? Also on the margin, not a financial advice. Once you do own, let's say it goes to 157 or something, you buy the stock. You also don't need the whole amount. You just need half, like 7,500. And Tastyworks gives you another 7,500 as margin, which you pay interest on. Not a financial advice, not telling you to do that. That's a whole different story for a different video. But in general, this is the conclusion. If you have Tastyworks, you can sell naked puts. If you have Robinhood, you need to sell puts as a cash secure. And that ties a lot of your money, and it takes you out of the game of all those big names that you can sell for about $5,000-6,000. You can sell one contract. No one says go sell 10. Sell one, collect $100 in here, 160 here, whatever the case. That's what I have for you. If you're not a member, 7 days trial with Market Chameleon, link below. I'll see you next time.